We had the latest numbers on inflation for the month of March, and God almighty, man, those were bad. And by bad, I mean hot. And by hot, I mean high. Yeah, it wasn't as bad as some people would expect, but the reality is people don't see what the Federal Reserve is seeing when it comes to food and energy. All right? But our fellow president, President Biden, decided to do something after he already tried few other things to bring prices down in order to make things easy for Americans at the gas pump. But did it work? No, it did not. And I want to share with you in this video exactly what is the latest tool he used in order to bring price down, but it's really not only in contradiction with its own mandate about something else, but also it is totally robbing you. And how to make sure you don't get robbed by doing exactly what I'm going to suggest to you in the latest part of the video. So if you haven't really paid attention to, but I'm pretty sure you have, inflation was really high. I talked about that yesterday on a video. But today, oil continued to climb. Look, you can see here that the barrel trading is now going back to $1.4 a barrel. Yeah, 1.4, and it doesn't seem to be going any time soon back down. Why? Just because we are entering the highest demanding period season of oil and energy because of summer. People are going to travel by air. Airlines are doing pretty good in terms of bookings, that are matching and flirting with pre-pandemic levels. I mean, just look at the stock of American Airlines today, and United, and Delta, and Southwest, and Spirit Airlines. I mean, all of those are jumping just because people are going to travel very soon. That's number one. So that caused demand for jet fuel. Number two, people are going to take a road trip. I myself am planning to take a road trip in July. So yeah, people are going to consume a lot of gas. All right. So what Mr. President Biden did is he decided to give the opportunity to people to buy blended gasoline to lower prices. But there is just one big problem with it, because this is just on the tail of flooding the market with sovereign petroleum reserves. He said he pledged to every single month flood the market with a new supply, and is the case for any other country part of the International Energy Agency. Actually, no, that's not correct. The EIA also decided to do the same thing. So both of them will actually provide millions of barrels per day to actually try to bring prices down. It worked, but for just one day. All right? And that's why I think it's not coming back down anytime soon, especially as we head into summer. Now, by giving the opportunity to want to have ethanol blended with gas, this is another attempt by President Biden to make sure that prices go down. But it's not going to do anything because of the law of supply and demand. The demand was already crushing the supply even before sanctions in Russia. But the problem here is it seems as if they are mocking the American people. Why? Because first off, they are trying to prevent U.S. companies from producing more oil. And now we're depending on people outside of the U.S., other countries, to gain oil. But the problem is Russia, who was the number one producer of oil for the rest of the world, is now being sanctioned. So that is causing another major issue in this market. But not only that, so that's already the problem here. But by adding ethanol, all right, to being blended, of course, it's maybe slightly more affordable, and that's why Biden hopes on that plan will bring prices down significantly at the pump. But the president also encountered resistance as ethanol fuel has for years drawn the ire of environmental and energy groups, to the point that the Environmental Protection Agency has banned its sale during summer since 2011. Why was that done? Well, because ethanol is not really environmental friendly. But we do also know that President Biden is really, really keen on pushing the green energies, right? So we know that that's really going to be far expensive. They have really, I mean, it seems as if they have no clue what they're doing. And now it's very confusing because ethanol is also being produced off of corn. And corn prices are double what they were just 1 year ago. So you take something that is already very expensive on the market, you want to use that to get it even more expensive, right? And corn is something that is being used not only for biofuels like ethanol, but also in major food compositions in the US and in the world. So you're going to actually contribute to food prices to continue to go a lot more higher when we already have oil still very high, and that is not something that will solve the problem, because it seems as if you are robbing Paul to pay Joseph, and it doesn't work. It simply doesn't work. And it's so ridiculous that they even think about it, because the very confusing part about this is they are trying to do the exact same thing for why they're preventing American companies from producing, and by doing so, prices ultimately at some point will go down. But that will have to start 2 years ago, because in order to operate a new field, a new well, to pump oil out of the soil, it's not something that you can just, at a snapshot, make it happen. It takes years, all right? So that is the problem, and that is why I think this administration is trying to rob you with whatever they're trying to do when it comes to pump and the price attempt reduction. Now, how can you get advantage of it as an investor? Because this is the bottom line. Whether you want to believe it or no, inflation is here to get sticky. But you can bypass and prevent it and hedge and protect your money from it by investing in some of these companies that are going to be in favor of inflation. Oil companies are one, food companies are two, grocery stores are three. But I want to focus now into companies that are producing oil, because these are the cheapest in the market as of now. So if you want to actually start looking into companies that you can start involving, I will say, as I always mention these companies, start with the small caps, all right? I can give you a few examples here that I already provided with you guys few months ago, like literally many months ago. This one, for example, Callon Petroleum. The price target on this one on the short term is $77. The long price target is $120. So you're already talking about at least 40 to 100% money gain potential, all right? This is another one, CDF stock. You can actually get it now at $9, and the price target is 12 to 15. And then you have Devon Energy. Seems expensive, but no, because the price target in the short term it's $80, but it's paying a huge dividend. That passive income is definitely on top of your money growing alongside the price improving. If you want to get into grocery stores, Target, definitely one I will recommend, but looking at the price, it's less likely, because if you want to maximize your buck, your money, it's pretty affordable to get the oil stocks that I mentioned earlier. And then another one, really, really very cheap, Grand Sierra Energy, $159 price target. This is really going to $8 a share at some point. Is it going to happen this year? No, but maybe next year. So we're talking about what? Huge amount of money to be made. So the bottom line is, by paying a close attention to what this administration is doing, which clearly for me doesn't seem as if it's any efficiency in it when it comes to energy, because they are also contradicting what the vision or what the mandate they're trying to put out there is. So if you pay attention to that, you can actually find some really interesting opportunities, not only for the short term, but definitely for the long term. So I guess we'll see how it goes for this summer, but yeah, bullish on oil and energy, and I'll see you in the next one, folks.